Hi guys, Chris here from Big Rig 150 Automotive News. I want to talk about something that affects a majority of people, and that's delinquent car payments. Now, this information I get is from my PNC bank rep. We have what we call a state of the dealership meeting twice a year. And this year he was saying how car payments are rising, how delinquency is rising. There's a lot of factors to it. And I want to go into the factors and why it happens and what you can do to maybe help yourself not fall into that trap. This is not this guaranteed not going to happen. It can still happen. But I want to try to help where I can so you kind of know what the pitfalls are. As of right now, the average car loan is $550 a month at 72 months. That is the average car loan. That's high. I started in the business 9 years ago. The average car payment was around 350, 375, in that range. Now that's on a 72-month loan. That was the average. Your average car price over the past 5 years has increased. And I'll give you an example. A 2019 Ford Explorer, your base price is roughly $33,000. A 2019 Ford Explorer Sport or Platinum, they're both roughly the same, is between $55,000 and $60,000. So car prices have jumped greatly. 3 years ago, the 2016 Expedition loaded out was roughly $65,000. Today, that same vehicle is $85,000. So car prices have jumped insane. Now, why is that? Why have these prices just jumped crazy? One, it's the supply and demand. People want the cars, so we're making more, and people are buying them. Two, you have regulations that are forcing the manufacturers to develop new technologies, and the unfortunate part is you have to spend money to develop these. Now, what I mean by that is there's CAFA regulations, which states that, I forget the year, I think it's 2025, so it's coming rapidly. The entire fleet of cars have to get 53 miles to the gallon on the highway. The entire fleet. Now, what's exempt from that are your work trucks. Not your F-150s, not your Rangers, your Super Duties, your 2500s, stuff along those lines, your cargo vans, those are exempt. So that's one way that Ford and some of the other ones are having a sigh of relief. Now, with that being said, you still have to develop the technology. You're still wanting to develop that technology in your work vehicles so you can have better motors and everything else. That was why back in 2015 Ford went to an all aluminum body F-150. That was the reason. And now Jeep is going to that. I believe Dodge will be going to that soon. Chevy said they're going to that. So a lot of that stuff's being talked about also. And I have another story that I have right over here that's going to be on the 4-cylinder Silverado. That will be at a later time. So that's one part of the story. The other part of the story is the interest rates. Over the past 2 years, since 2016, the Fed, which is the bank, the big bank, the government's bank, has stated the economy is doing great. We can increase the interest. So you have had your interest rates go up 0.25% here, 0.25% there. Over the past 2 years, it has jumped 9 times. Each time anywhere from 1/4 to 0.5%. That is another major contributor. You used to be able to borrow money at a very low rate. You used to be able to go on a 72-month loan at roughly 3.9%, which there was better if there was a program, but if you were going through an outside bank other than the bank that you're dealing with, the manufacturer you're dealing with, you would be paying 3.9. Now, that same outside bank, that same car, that same loan is now 5.9 to 6.9. You have jumped that much in 2 years. So which makes car payments go up. So now you have to think, how do you combat that? Well, the one thing is you have to put money down. A lot of people do not have money to put down, so the payments are higher. So now that's leaving people to delinquencies, being more than 90 days late. A lot of young people also do not have the established credit to help with a lower payment. A lot of younger people are also using ride shares to get around. How does the automotive industry combat that? That's the question. The one thing car manufacturers, especially Ford, Chevy, Dodge, do not want to be is a repo company to take your cars. They would rather you have the cars. How do we combat that? My humble opinion is you have more auto loans. I'm sorry, not more auto loans. Better lease incentives. And you have better lease incentives so that people can get into a vehicle, instead of at the $500, you get them at high twos, like $275 up to. But that's also on not all your bells and whistles. The consumer is $7 trillion in debt with car loans. $7 trillion. And I think the number of people that are delinquent is at like 52, 55%. It's up there. So you have a lot of people that do not have that set. To me, the way that you combat it is you try to find a way to make leasing better. Now, the car manufacturers and the banks are also extending loans out to 84 months. That's 7 years. But your interest rate's higher. Your payments are higher. Not all the time. But now you're going at, instead of 72 to 84. Instead of being 5.9, it's 6%. I'm sorry, 6.9%. So, that's some of the stuff that's really affecting it. I hope to have more news on this at a later time. But for right now, this is Chris Bristow, Larson Ford. Have a great day, guys.